Time now for Stacking Up. Tom White of Red Option Advisors joins me now for a look at the most unusual options he's seeing in a number of names, including Herbalife. Great to have you back on the show as always,
Good to be back.
Now, Herbalife is a tough stock to trade, to own. So many headlines coming out on this at all times. What do you think?
They just settled with the FTC for $200 million over their pyramid scheme and illegal business practices. So going forward, they're going to have to show that 80% of their sales are actually based from real customers and not just within their pyramid. So there's still a lot of negativity out there in the stock from activist investors, but also you've got some big investors like Carl Icahn that are actually big shareholders. So there's some push and pull in there.
Are you bearish or bullish on this stock then?
I'm not really bullish or bearish.
You
I'm
just
bearish
think
on
there's going to
the
be a move.
company itself.
Okay.
I'm bearish, but
Sure.
we're seeing some option traders buy some way like $10 out of the money calls in there, so they're taking a bullish position in there.
A number of the big Dow stocks, including McDonald's, is down. Is this a buying point?
It might be. So previously on the show, I think a couple months ago, I was a little bit bearish on McDonald's as valuations grew. Their all-day breakfast worked pretty well, but the valuations on the stock were really getting too high historically in that name for me. And we expected a pullback, which came about. It's down about 10-11% over the last few weeks here, as the sector's kind of been getting hit a little bit. Now it might be that time where you're getting a dividend yield of about 3%, that it might be time to get back in there. They're still the king of that space, the fast food. And that new CEO is doing a really good job as far as...
He's not fooling around.
No.
He's making changes, like look at his split.
I know, they're actually putting food into their food going forward. So
It's clean now.
Yeah,
you can eat it. But it was always good. It tasted, whatever they were doing, it tasted good.
Yeah,
I have to say that.
So valuation-wise, we might look to get in there right now using options where we've got a specific time frame where we can get out. But we do like this $115 to $118 level in McDonald's.
One other stock to get to, and that is Delta Airlines. And this week has been a horrible week for that company. They're talking about the Zika virus in Miami slowing down passenger traffic.
Yep.
What do you think about the stock?
Yeah, I think it's a falling knife right now. We've seen a lot of analysts come out and try to pick the bottom in there. As oil prices come down, you're expecting them to do a little bit better as they're paying less for jet fuel. But what we're forgetting is that Delta Airlines bought a refinery a few years ago in anticipation that oil prices were going to stay at $90, $100 a barrel, where this would actually help them. It's actually hurt them a little bit. So now they're dumping fuel on the market to try to make up for their passenger revenue falling year over year. I think it's about 7% in just from July of last year to this year. So they're seeing some slowdown there. I don't see many empty seats on planes. I don't know where they're getting all this. But they are having to lower fares, and it's going to hurt the stock a little bit. Stock's off 28% in 2016 alone. And for me, that's probably a good entry point, but you want to stay covered on the downside. So what I like to do is I like to buy stock and then sell at the money or just slightly out of the money calls against it, just to lower my price point and then also get a little bit of return on that long stock.
A covered call.
Yes.
Thanks for coming on the show.
Good to be here.
Covering all those stocks.